All right, welcome back, guys. Today we're going to be doing a check-in on the good old dividend growth portfolio, see how much income it generated in the first month of 2023, compare it against the market, and see the impact that my covered call funds are making on my income generation. I hope you guys enjoy the video. If you find it motivational, I always appreciate a like, subscribing, and let's do this. So today is February 9th, and in the past 1 month, here is the overall performance of my portfolio. Up 5.13% with $134 of dividend income. For comparison, the S&P 500 also had a very positive month. It was up 5.82%. So in comparison to the S&P, my portfolio is very similar, but it is slightly lagging behind. But to be honest, I'm perfectly okay with capturing, 97% of the return of the market, considering that my overall dividend yield is significantly higher than the S&P 500. So the dividend yield on the S&P right now is 1.58, and the dividend yield on my portfolio is 4.928, almost 5%. And I'm super proud that I was able to construct a portfolio where I have a 5% dividend yield, and I still can capture the vast majority of the returns of the overall market. And of course, the way that I achieve this is in addition to my passive indexes, VGT, VOO, and SCHD, I have these hybrid funds, BST, Divo, and JEPI. So these funds are actively managed, but a majority of the assets are still invested in plain old equities. And then they have a covered call overlay strategy to help boost the overall dividend yield. And the overall combination of all these is how I achieved those great returns with a high dividend yield. Now this is the activity page of my portfolio filtered by dividends. And this illustrates how the vast majority of my income comes from my covered call monthly paying funds, including JEPI, Divo, and BST. And to go through these, on January 31st, Divo paid me a dividend of $28.03. And that equates to a dividend per share of 14 cents, which is pretty much right in line with the other previous dividend payments. Now, the main criticism with Divo is that the dividend isn't really growing that much over time. If you go all the way back to 2021, the dividend was very similar, if not actually a little bit higher than it is right now. Although personally, I still am holding out hope that eventually they can get the dividend to grow again. And the starting yield still isn't that bad at 5.14%. And over the past 1 month, the price action is negative 0.83%. That's obviously a lot worse than the S&P 500, but value has been struggling so far in 2023. Now, just the other day, JEPI paid me a dividend of $52.40, which is significantly lower than the previous payment of $67.46. So that most recent dividend payment was 44 cents per share, and that's a pretty massive cut when compared to the previous few months. Now, I don't think this is alarming. The income from covered call funds do fluctuate over time. Really what you want to look for is the long-term trend going in the right direction, and JEPI still largely has that. The starting yield is still a ridiculous 11.76%, and over the past 1 month, it has suffered, and it's down 1.25%. So when it comes to my thoughts on JEPI, of course, back in 2021, the fund did phenomenal. It outperformed, held on to its value, and paid a high monthly dividend. But in my opinion, the party might be coming to an end with JEPI. And I've been looking to potentially replace JEPI in my portfolio with CII. We can see here that the price action is similar to JEPI, aka conservative, but it still has more growth, as we can see by the annual return of over 20%. I mean, just for example, today, JEPI is essentially flat, up 0.07%, and CII, I know this is just 1 day of data, but it's up 0.29%. So it's just a bit more growthy while paying a pretty nice dividend of about 6%. And my final major dividend payer is BST, and they just paid me $54.43. That comes out to a monthly dividend of 25 cents per share. And BST is a closed-end fund, that's why the distributions are all the same. Now, a lot of you guys have been asking for my updated opinion on BST because, of course, this is a science and technology trust. So the past year, of course, the performance has been terrible, although we have a nice comeback. The past month, it's up nearly 10%. And whenever I look at the holdings and the covered call strategy of BST, I always get reaffirmed that this is quality and it's something that I want to be invested in. And not to mention that as I wait for the price to recover, I'm being paid a heavy 9% dividend on a monthly basis. The only thing I'm really looking out for when it comes to BST is that they eventually increase their dividend payment. Historically, they increase their dividend once, maybe even twice per year, and that's a great indication of the health of the fund. But it's been about a year and a half since they increased the dividend. So it's definitely something that I'm monitoring closely. So that's the latest on the performance and the income that this portfolio has been generating for me. But of course, these covered call funds are definitely not for everybody. So a question I wanted to quickly answer is, if I didn't invest in these covered call, monthly income producing funds, how much income would I have in that scenario? Well, right here is a mock portfolio where I ditch all of my covered call funds and I just keep my passive indexes, which, by the way, this in and of itself is a great portfolio. We can see over the past 5 years, this is the very strong returns. But unfortunately, the combined dividend yield in this scenario is just 1.89%. So with my portfolio balance of $45,000 times my current yield of 5%, I have a yearly income of well over $2,000. And remember, I also don't sacrifice that much in terms of price appreciation. The overall return of my portfolio has been very similar to the rest of the market. But if I didn't have my covered call funds, so I had my value of $45,000 times 0.019%, then I would have a yearly income of only $855, which per month is only $71. So that's the impact that these covered call funds bring to my portfolio, and I'm happy to have them. As mentioned, the only change I'm considering doing is potentially selling JEPI for CII, but I'm still in the research process of doing that. And I'll probably make a video in the near future showing my research and comparing CII against JEPI on this channel. So make sure you are subscribed for that. I hope you guys enjoyed, and I'll see you guys in the next one.